What shifted in your Social Security payment starting May the 1st is something officials were perfectly comfortable allowing you to figure out on your own. But that is not acceptable. You were not sent a clear, easy-to-understand letter explaining the changes. No one interrupted your nightly news to outline the details. And your local Social Security office certainly did not call you personally to walk you through what is happening. The very system you paid into with every paycheck throughout your working life now expects you to sort through complicated updates hidden in technical wording and fine print. That is not right. Not for you, and not for the millions of Americans who built their retirement plans on the understanding that this income would be reliable when they needed it most. So, here is what we are doing today. We are going to break down every major update currently affecting Social Security. We will explain what each one means for your monthly deposit and spell out exactly what steps you should take before another week goes by. Because the difference between retirees who safeguard what they earned and those who slowly fall behind usually does not come down to luck, special connections, or wealth. It comes down to one thing: understanding what is happening and responding in time. Here is what we will cover. We will go through the cost of living adjustment that is now reflected in your May payment and explain why the actual increase in your bank account may feel smaller than you expected. We will discuss a significant law that eliminates two long-standing provisions that reduced benefits for public workers for decades and why May marks the beginning of those corrections. We will examine how Medicare premiums are deducted from your check before you ever see it and review a lesser-known appeal process that could return hundreds of dollars to you each month. And we will address earnings limits, taxation, and the precise actions you should take this week to ensure you are not missing money that rightfully belongs to you. Let us begin with the cost of living adjustment, because there is a real disconnect between the headline increase and what retirees are experiencing in everyday life. The Social Security Administration announced a 2.5% COLA for 2025. On paper, that sounds like a raise. For the average retiree, it translates to roughly $50 more per month. If both spouses receive benefits, that could mean over $2,200 more over the course of the year. And yes, that increase is now included in your May payment. If you have not reviewed your recent deposit, check it today. But here is where reality sets in. That 2.5% figure is calculated using the Consumer Price Index, which measures price changes across the broader economy. The concept is simple. When prices increase, benefits should rise accordingly. That is the theory. Now ask yourself honestly, has your grocery bill increased by only 2.5%? What about your utility bills, fuel expenses, prescription costs, or insurance premiums compared to last year? For most retirees, the answer is no. And that is not just perception, it is arithmetic. The index reflects the spending patterns of the entire population, including younger households with very different expenses from retirees. Older Americans spend a larger portion of their income on health care, housing, and essentials, the very categories that have experienced some of the sharpest increases. So while 2.5% may represent general inflation, it does not necessarily match your lived experience. It may not reflect what it feels like to stretch a fixed income while costs continue to rise. This is not meant to discourage you. It is meant to clarify where your money is going. That $50 increase matters, but only if it is not being offset somewhere else without you realizing it. And that leads us to something many retirees have never had clearly explained, something that has quietly impacted Social Security checks for years. If you or your spouse ever worked in the public sector, this may be the most important part of today's discussion. For decades, two provisions reduced benefits for certain public employees. They were known as the Windfall Elimination Provision and the Government Pension Offset. If those names are unfamiliar to you, consider that fortunate, because for those affected, these rules meant losing hundreds of dollars each month. Here is how it worked. Suppose you spent part of your career as a teacher, firefighter, or other public employee in a role where Social Security taxes were not withheld because you were covered by a pension system. At other times in your career, you held positions where you did pay into Social Security. You earned credits and contributed taxes, expecting to receive benefits from both systems. However, The government applied an alternative formula that reduced your Social Security payment simply because you also received a pension. Not because you did anything wrong, but because of how the law was structured. The government pension offset went even further. It could reduce or entirely eliminate spousal or survivor benefits. That meant some individuals lost access to benefits earned by their spouse after decades of work. Approximately 3.2 million Americans were affected. Teachers, law enforcement officers, and other public servants who dedicated their careers to their communities. That has now changed. The Social Security Fairness Act has fully eliminated both provisions, not scaled back, but removed entirely. This means millions of people are now entitled to the full benefits they should have been receiving all along. And May is when many of those corrected payments are beginning to arrive. Some individuals may see monthly increases of $200, $400, or more. Others may receive retroactive payments totaling thousands of dollars to compensate for past underpayments. Here is the concern. There are people who qualify for these adjustments and have no idea. They accepted their benefit amounts as final because the system presented them that way. It was not final. If you or your spouse worked in a public role without paying Social Security taxes, or if your survivor benefits were reduced, you need to follow up. The system is processing millions of cases, but those who actively check and confirm their status are often the ones who see results sooner. Now let us discuss another issue that affects nearly everyone: Medicare Part B premiums. These premiums are automatically deducted from your Social Security payment before it reaches your account. You never physically see that money. It is removed immediately. In 2025, the standard Part B premium increased to $185 per month, up from $174.70. That amounts to more than $120 extra per year deducted from your benefits. So when you received that $50 COLA increase, roughly $10 of it was already offset by Medicare. Your actual increase may be closer to $40 per month, and that is only the standard premium. There is also something called IRMA, the income-related monthly adjustment amount. If your income from 2 years ago exceeded certain thresholds, you could be paying significantly more, sometimes exceeding $600 per month. Here is what many people do not realize. You can challenge it. If your income has decreased since that time due to retirement or other changes, you can submit Form SSA 44 to request a reduction. Many retirees have saved thousands annually simply by filing that form. If you are working while collecting benefits and have not yet reached full retirement age, you should also be aware of the earnings limit. For 2025, that limit is $22,320. If you exceed it, your benefits may be temporarily reduced. However, the withheld amount is credited back later. Still, the short-term impact can be meaningful if you are not prepared. And then there is taxation. Yes, your Social Security benefits can be taxed depending on your total income. If your combined income surpasses certain thresholds, up to 85% of your benefits may become taxable. Those thresholds have not been updated in decades, meaning more retirees are affected each year. So, what should you do immediately? Log into your My Social Security account. Carefully review your earnings record. Errors can reduce your benefit amount. If public sector provisions may have affected you in the past, contact the Social Security Administration directly. If you are paying elevated Medicare premiums, consider submitting an appeal. If you are working, track your income against the earnings limit and review your tax situation before filing season approaches. Here is the bottom line. None of this is impossible to understand once it is explained clearly, but the system does not explain it clearly. It processes payments. It does not advocate for you. The retirees who benefit most are the ones who stay informed, ask questions, and follow up. You worked for decades to earn this income. It belonged to you then, and it belongs to you now. The rules shifted this May. Those who respond to these changes are the ones who benefit. If this helped you learn something new, share it with someone who may need it. It could make a meaningful difference in their financial life.